Michael Bell, welcome back to see you on the show. As a past guest, I know that our audience really appreciated your insights on all the activity in credit unions buying banks. You have been one busy fellow. I see you all over in social media and credit union activity. So how are things, Michael?
Very good, Doug. I enjoyed our previous chat, and today really will align. There's essentially three things that I always talk about and do across the country when it comes to buying, right? Credit unions buying banks, you mentioned, we discussed that. I also throw in the idea of bank branches. It's very similar to banks, obviously. And then there's these everything else transactions, these ancillary businesses, the things that are next to banking, but a lot like banking type businesses. And I look forward to talking about that today.
Yeah, that's what we wanted to dig into. I haven't seen a lot of content on credit unions acquiring other entities other than a depository institution. So let's just kind of what is behind it when a credit union decides to buy another sort of entity? What do you hear?
Yeah, so just to set the stage, because you're correct. So anytime a credit union buys a bank, or a bank or a bank merges, there's press releases. It's easy to follow those. Easy to follow when bank branch deals occur for that same reason. But these transactions, I'll tell you, last year we probably did 20, 30, 40 of them.
Really?
Yeah, it's very frequent. They don't get the announcement that these aren't publicly traded businesses. These don't hit the press necessarily, or if they do, it's very localized and it's not making like trade publications and things like that. So when you reached out to me, I was like, Doug, you're on to something. Kudos. Because you said, does this happen? We should talk about it. What's going on here?
Yeah.
And the answer is it happens. It happens all the time. And not only that, I'll tell you, we're in a phase today where this is happening more than it has happened in the past. And there's reasons for that. But this is the time where these businesses are selling.
Hmm.
And then to answer the first question you asked me, this is certainly, I would say, a member service type play.
Hmm.
There's margin pressure in our business, always is. There's fee income pressure. Everybody talks about that. This is a way to certainly economically generate non-fee income, right? Non-margin income.
Mhm.
But more than that, I think the bigger, deeper play that I'm seeing our clients use this for, it becomes a deeper member experience. So for the members we, have deposit and loan products, we all know about that. But by the way, now we have insurance, investment, title insurance, you name it, and it becomes a deeper, wider member relationship. Some people call it product per household or wallet share. All those boxes get ticked, and there's a lot of credit unions out there that very successfully are in these ancillary businesses. And I'll just throw it out there. This is something that banks have done forever, right? The idea of being in insurance, investments, title insurance, etc., has existed for 50 years
Yeah.
in bank land.
Yeah, I mean, it makes intuitive sense that you'd want a one-stop shop, your financial services, just it would be uh, simplifying for your personal life. But in credit unions, what is it that you find to be behind the transaction in the first place? Is it part of the strategic plan for the organization? Is it that they become aware of something in their neighborhood? Like, what is it that is behind that process?
Yeah, so look, I think sometimes these are accidental, right? Like sometimes the phone rings and things happen, but I will say that's the exception to the rule. Those that are doing this are going on the offense, right? They're making an effort. They realize, hey, we see value here. We want to grow our investment. We want to bring insurance in-house rather than have just a referral business, et cetera. And then they go out. And let me just flip it quick to explain. I said, Doug, that the time is now for this. And I believe that because I would ask everybody, just take a second, put yourself in your Chamber of Commerce, Rotary, Lions Club meeting, whatever that is. Look at the people that own the local insurance business or investment business. How old are they? They're baby boomers. What are they doing? They're retiring. They need an exit plan. And certainly, again, exceptions. I'm generalizing, but I'm telling you that we are seeing owners of title companies, investment companies, insurance companies looking for a partner and selling because it's time for them to retire and go on a cruise ship. And I'm not just saying that happens once. Last year, that happened 45 times. Last year in the state of Texas, I think we purchased 5 different title companies from people that are retiring. By the way, I think total title company deals we did are over 10 across the country. It's the same story. It's a family business. It's a couple partners. These are wonderful businesses, but the folks are ready to retire. That has really upped transaction flow. And then back to what I said, it is an offensive proposition. So that I think that the credit unions need to be out there. They need to be in the community, and they need to make known that we're a possible partner. When a bank sells, professionals usually sell the bank. We kind of create the marketplace, right? I'm identified as a buyer. There are people just like me that are identified as seller side, and we create a marketplace. So if you want to buy banks, you could essentially call me, and chances are you're going to see most of the deals, right? This is different though. There isn't a central marketplace for these types of businesses. And so it takes more of a localized approach, regionalized approach, offensive approach. I can't tomorrow deliver you a title company. I probably could a bank, right? It's just different, but credit unions we work with have had wild success. Once they go into the community, and once they say we're available, we've done some great transactions and seen some wonderful results.
So how does the credit union, let's assume that this is a strategic decision, and the credit union is going to look at these ancillary businesses. Which ones are making the biggest impact to like, how does this affect the balance sheet? How does this affect the ratios? And what businesses are like, is there like a preferred order that you sometimes see as far as, which space do they go after first, most commonly?
Yeah, so I will tell you the regular suspects, right? The ones we see the most. I've kind of mentioned, but I'll just lay them out. Definitely title companies,
So that's where it
property,
starts.
yeah. Title companies, property and casualty insurance
Mm-hmm.
businesses, and then registered investment advisors, right? That's kind of the low-hanging fruit. But I will tell you, we've purchased everything. And just to give you a flavor, Doug, we purchased a used car lot for a credit union. We've purchased a portion of an armored car company, just to really expand everybody's position. But another one that we see that I think is really special, help multiple credit unions get into real estate. So we have purchased real estate brokerages or buying and selling businesses. And it's something that I love because I was talking to a couple of credit unions I've done this with, and they explain that, you can come to us and get your mortgage, title insurance, property casualty, but now we can help you buy and or sell. And then Doug, at the closing table, they will rebate back, because you're a member, some of the commission that you're paying.
Wow.
Which is really tangible, really substantial. And talk about a member benefit, right? Looking at your closing statement when people are focused and seeing $1,000 credit or something, that is like some hardcore, whoa, I'm a member and I get a benefit type stories that I've heard that I just think are awesome.
That is awesome. I've never heard that, Michael. That is a huge impact to the member.
Yeah. Yeah. And there are credit unions, and again, this doesn't necessarily receive press, nor should it. I mean, this is just business, but there are credit unions across the country that help their members buy and sell real estate and have real estate professionals, and have done it well for decades. They've been in the business a long time, and it's really interesting and fascinating to me. I love that they're in that business.
So you said title insurance, property casualty, and RIA. So when a credit union buys one of the first two entities, what is the effect on the balance sheet, on net worth?
Yeah. Yeah. So look, you're going to spend some capital to make the purchase, right? Now, typically and these certainly could be large, but we typically see transactions, ranging from $1 million to $10 million type transactions. These are not massive transactions. Like sometimes we'll buy a bank and you're going to spend $100 million, right? Or 200 million. These are on the smaller scale. So as to your balance sheet, you're certainly putting capital to work, but usually not that much. And I'll tell you, these are done or valued usually on a earnings multiple, right? So we look at the historical earnings, we can see the earnings forward. You'll pay a certain multiple that's industry standard, and these pay back and are cash flow positive from day one rather quickly.
Immediately, right? Yeah.
Yeah, and again, this is a different kind of income. So this is not related to fees. This is not related to the margin between deposits and loans. This is a different type of income business that can supplement your normal business. And it's really powerful. You can look at credit unions. There are several that come to mind that are deep with investments and insurance and maybe have title insurance. And it really diversifies in the end their balance sheet and income statement when it comes to, funding. It's pretty impressive.
It is, and it seems to. I mean, so I imagine there's a threshold for most credit unions at which the scale is sufficient, the capital is sufficient to start these kinds of activities. And I assume it's purchased by a QSO, right? QSO is the organization that buys the businesses. But I would also imagine there are probably some QSO organizations that are multi-credit union that are doing this kind of thing. Any examples or ideas in that area?
Yeah, so that's yes and yes, right? And I tell people, don't get lost or confused or paused on this QSO thing. QSO is a legal entity, it's a subsidiary. That's something that the lawyers or the accountants will work out for you and make sure is all safe. Sometimes when we buy these things, it actually doesn't go in a QSO, Doug, right? We make a decision, there's a reason not to. It's just in the mainline business of the credit union. More often than not, it is in one. There's not really a decision or a great debate to be had there. It's just a matter of how the organization is organized and if we need to start one or add one or put it in one. So I don't get lost in that space necessarily. It's more about, is this kind of the right partnership? Again, a lot of times we buy these businesses and most of the folks are retiring. They may stick around for a little bit, but a lot of times this is something we're buying and then we will then take over and run. We just have to make sure we're prepared for that.
Yeah, and so title insurance is the one that came up first. So do you, I just asking, do you often see where the credit union has some participation in the space prior to an acquisition, or is there a market entry, the acquisition?
Yeah, so it could be both. I'll tell you that for the most part, this is market entry though, when I think of title companies. So I think a credit union looks around at what it's doing and it's seeing its first mortgage, HELOC operation, and there's some third party that's doing the title piece and they probably do it well and it's great, but they're looking at the costs and fees involved in that and thinking, boy, we could kind of feed our own machine for that matter and deliver better value to our members at the same time.
Mm-hmm.
So on the title insurance piece, it's often market entry. When it comes to investments in insurance, usually the credit union is in that in some way. It might just be through referral systems. Those are deep in our industry. I think they're great. I'm not against those. But they're usually toe in somehow.
Mm-hmm.
And then they realize, oh, there's actually a bigger opportunity for us. And they will go away from the referral and do their own.
Yeah. Yeah, that makes sense. I mean, running a wealth management firm when I'm not running a podcast, I know that there's a bit of a different philosophy in that space versus in a lending institution. And I would think that the credit union would be more successful if they already had a team that was kind of running a successful investment department and they just bolted on an RIA or independent advisory firm onto the system. I think that would make more sense. But again, going through the three: title, property, and casualty, and investments, I would assume that probably investments one is the one that takes the most capital, because I think the price would be higher. I guess it's a matter of scale, right? But
Mhm.
I would think there's so much private equity activity in the RIA world that the
Mhm.
prices have gone way, way up. I don't know that that's the case. I know you see veterinarians, you see dentists. They're all, it's all part of the roll up game, right? Where you buy a bunch of smaller entities at a low EBITDA multiple, and you roll it up to a large entity that has a bigger multiple, and the spread is how your day goes. So are you seeing that sort of competition in title and property and casualty, or is that just not there yet? Because if it's not
Yeah.
there yet, that sounds like a heck of an opportunity.
Yeah, so you're right on this roll-up thing. And I mean, you didn't mention things like plumbers, electricians, and HVAC contractors too, right? That in the industry, the PEs are doing it everywhere.
Yeah.
I'll tell you that I'm sure it's happening in those spaces, but I'm just thinking backwards, Doug. Anecdotally, if I look at the last 20 or 30 of these that we've done, and I think a great majority are on the smaller side. So I'm just trying to think of some investment things that we bought, and it's really just been one person, right? It's been a single person that has built a business in a town, and they're looking for an exit plan, or they're looking for some growth, because there are some young investment advisors that are looking to kind of pair up and have a chance to grow, and they found this is that as well. But it's definitely the smaller end of the market for the most part.
Mhm.
We again are not buying massive operations, or at least we haven't been a part of that.
Yeah. Yeah, the very, very interesting. Like I said, I hadn't seen any press on that before. So, all right. So this activity is happening. It's in a QSO sometimes, not in a QSO other times, and it's creating immediate cash flow for the credit union. And that kind of it sounds all good. It just kind of makes me wonder, why isn't it happening more? Like, what do you hear? Like, is the board just afraid to go outside of the core area of the credit union? Is that what's holding things back?
Yeah, so I think there's two sides to that answer. The first thing I would say is I think it is happening more than we know.
Is it?
So me just sitting here, I know how much we've done it, and
Right.
I'm sure there are plenty of other people doing it. We're not the only show in town. It just doesn't make necessarily the press that we all read. And then second, I will tell you that because there is not an established, marketplace like there is when we go and buy a bank, I think it is a little more challenging. It's a little more hit or miss. You can't really run into these accidentally or see them broadcast in some general place. You've got to go get these. You've got to put yourself out there for the most part. These won't find you, you find them. And that's a big deal. I think you could sit at your desk and never have put yourself in the marketplace to buy a bank and probably see deals today because they get broadcast, depending on the seller. That won't happen here. Very rare. And so I think the fact that there's not an efficient marketplace, and also these just don't get the coverage. These are happening. They really are. Doug, you were shocked earlier when I told you how many we did last year. You were
Yeah,
like,
yeah.
what?
I was completely like, again, I'd
Yeah.
never see it in the press. Never see it.
Yeah. And look, we're pretty active. I have clients all over the country, right? I'm not bashful about that. We do a lot. But I know, again, we're not the only show in town, and there's plenty happening that we don't touch. But we did a ton last year. And if I think about it, it was more title companies than anything else. There's no
Hmm.
reason for that. I mean, it's just the coincidence of it. We'll see what 2025 brings. But there was a time, it was like last February, we probably bought 4 or 5 different title companies from Wisconsin down to Texas in the month of February 2024. But, there's no reason.
Well, it seems like
Specifically, I
this.
remember.
It seemed like
Yeah.
the shortest step, right? From the core
Right.
business of a credit union to buying a title insurance company seems like an easy step.
Mm,
And then the
yeah.
property and casualty a small additional step, and the RIA they may already be in. So it makes sense to me. It's just interesting to think about the strategic plan that it originates from, right?
Yeah.
And it's a strategic growth plan. I assume that the executives has put together with the board, and this is part of that strategic plan as just a broad growth goal, or do you see it as it is, this is a specific target towards these industries. How do you see it?
Yeah, so I do think obviously it takes some offense, takes some boldness, perhaps a little bravery if you're going to step into new.
Mm-hmm.
And those that I think are most effective and do it well and do it the best are those that have a deliberate plan, right? They're the credit unions were speaking. They said, look, we want to be in insurance and title. Let's do it, right? I mean, we are focused. They have thought about their organization and what they can support, and they do it deliberately and strategically. And again, if you look, sometimes it gets a little more press just because the scale. You could look up super regional or regional banks, and if you follow them, you will see announcements with them doing this very thing, but more up market. And because they're publicly traded, they do hit press. But if you follow Truist or Fifth Third, those type of banks, you'll see a lot of buying and selling of various ancillary businesses happening all the time in their world.
Very.
Again, different scale than ours.
So let's say that you are a credit union that's listened to this podcast and you think, all right, I want to learn more about what's going on in this area. Ideally from credit unions that are doing it, have done it, have some track record to teach the rest of us about. Are those conversations happening in a way that you know about? And if so, where?
Yeah, so I mean, they are, our industry, because the only industry I serve is great in that regard. Like I believe that.
Yeah.
And so when people are thinking about this, or perhaps I talk to them quickly, I'm like, look, you should, and I'm not going to name names on a podcast, but you should call this person and that person. And those people are gladly speaking to their peers about what we've done together, what they did, why they did it. And it's very helpful. And I'll tell you, Doug, sometimes those conversations lead to the person saying, well, yeah, this is not for us, which is a great answer too.
It is.
And then the other half of the time, it leads to them saying, yeah, we want to go on offense. We're going to toe in on getting an insurance business. I always say that the right answer is both yes and no. The wrong answer is just missing it, not considering it, not knowing it's available, and putting your head in the sand. That's the problem I have. I'm happy to go in front of a board or a C-suite and have them say, hey, we get it. No need for us to do it. I'll say, great job, right? Check that off your list. Just like, yep, this is a great idea. Let's do it. It's those that are unaware, I think, that are missing an opportunity, at least to understand and say yes or no. That's the key.
Michael, do you know, are there states with regulatory no-goes in this area?
I'm not aware of any. So the NCUA QSO rule and clearly has permitted powers. These all tend to fit in there. States either mirror that or have their own. If they have their own, they're usually almost identical. Very rarely are they less permissive. So I've yet to run into a situation, again, I don't have them all, where I've been in a situation where we were like, oh, wow, we actually can't do this. And we've done it coast to coast. So I just have not seen that as an issue.
In some states, credit unions can't buy banks, though, right?
Correct. Well, to be clear, credit unions can buy banks in 50 states. In some states, banks cannot sell to a credit union. There's a distinction, and it's a limitation on a bank's power to sell. By the way, produced by the bank lobby, which is just wild. And we don't need to go down that rat hole, but they advocate for and pass specific laws to limit the power of their own customers to sell, just to be clear.
Well, it just got me thinking that the credit unions that are in that space, were they to have that interest, this is an alternative that I'm not sure how you would weigh it versus, you wouldn't weigh it because you can't buy a bank, but it would be an interesting alternative to at least consider in your strategic design.
Agreed. It's all non-organic growth. And again, I think there's a lot of credit unions that don't do any non-organic growth, and good for them. I'm not suggesting it's for everybody, but the non-organic growth spectrum, Doug, you're right, would include whole banks if you can, bank branches if you can, and then all these businesses if the strategy makes sense. That's the trifecta of non-organic growth.
The trifecta of non-organic growth. I think we found a title for our podcast, Michael.
That's right. That's right.
Awesome. Well, thank you for making the time to come back again and to enlighten us about this busy part of credit union growth that I at least was pretty unaware of. So I hope this helps our listeners. And again, if you want the real expert, reach out to Michael Bell, and he'll tell you what's going on. Thank you again, Michael. Any final words for our listeners?
Yeah, Doug, I appreciate it. I will leave. The final thought is not do this or don't do it. The final thought is actually based on where we are today, now would be the time to consider it, right? Very active, lots of opportunities. Up to you if you do or you don't. But you're going to miss the boat if you don't at least consider it now. Now would be the time to think this through as a strategy.
Right on. Awesome. All right, Michael, thank you so much for your time today. Thank you for your work supporting and driving the credit union movement forward. We will look forward to talking to you again.
Yeah, Doug, my pleasure. Thank you.